Let's take a look at the housing markets over the weekend and in particular the auction markets. Let's start in Sydney where there were 322 homes that went to auction. The clearance rate there you can see strong, 87%, and across New South Wales a further 1,561 homes were sold during the week. In Melbourne there were 613 homes up for auction, the clearance rate of 80%, and a further 1,251 homes sold across the state in private sales. In Brisbane, just 33 homes under the hammer here. The clearance rate was only 64%, but a further 1,330 properties were sold across the state. In Adelaide, the election didn't slow down the market. 55 properties up for sale via auction, the clearance rate 91%. In the ACT, 68 homes went to auction, the clearance rate 85%. And in WA, there were 745 private sales across the week. Let's bring in here Angus, economist with REA Group. And Angus, I just want to start by talking about affordability. Clearly, there was the government sort of, if you like, review last week of housing affordability. A lot of recommendations, a lot of ideas. The question is, do you see any result at the marketplace, at the auctions around?
So, yeah, certainly big report came out last week, a couple hundred pages, and I think we can probably get into some of the interesting stuff in there. But in terms of what that's meant for auctions this week, nothing yet.
No.
We're certainly still seeing quite busy conditions around the country. We've had a busy start to the year. That's really been the theme, seen a lot of sales, tracking similar pace to last year, which is notable because last year was very busy. That said, we have been a little slower in the past couple of weeks than we were through February. That's maybe not surprising, just given how busy February was. And as we're heading into the autumn selling season, we think things will probably continue to stay pretty strong.
OK, let's go to the report because I want to go to the heart of that, because housing affordability is a problem. When you've had 20% plus growth in every capital city over the past year, and it's been as strong as it has been, of course, a lot of people are frozen out of the market or they're taking on mortgages that in the future they might question. That's a fundamental problem.
We're certainly seeing affordability getting stretched as prices have risen, and I don't envy the committee their task in tackling what is a decades-long decline in home ownership rates. We saw a lot of recommendations in the report. A big theme in the report was really around supply and finding ways to help us build more homes, easing the restrictions on building homes, as a long-term solution to affordability. OK,
so that's the supply side of it. There's also the demand side of it.
Yep.
And that is while you've got investors actually chasing the same properties as you've got first home buyers and everybody else in the marketplace, that becomes also a part of the issue here. In other words, there's not enough homes for the people who are chasing them.
Absolutely. And I think that's the key issue from the report, is that we need to tackle both sides of the market. They focused a lot on the supply side, and I think that's a welcome development. We don't probably talk enough about building enough homes as a solution to affordability. But yes, on the demand side, they had a number of recommendations around things like allowing people to use their super as collateral for taking out loans as first home buyers. They spoke around negative gearing, which often comes up when we're talking about demand.
But which, of course, got knocked back at the previous election. So the public wasn't warm towards that, you'd imagine.
Exactly. And the committee didn't recommend making any changes to negative gearing. Their assessment was that it would make not a big difference to affordability. And
what about superannuation funds? Because that's always the big bugbear. Why doesn't a person take some of their wealth for the future, for their retirement, and use it today to create wealth through their house?
So that was certainly something that the committee recommended, being able to use your super balance as collateral for a mortgage. I think it's fair to say that's a controversial position for obvious reasons. Super is a very important part of retirement incomes. Using it for housing is potentially seen as risky. Whether it's going to be a long-term solution to affordability, I've seen arguments on both sides. I'm probably not completely convinced. If we think about first home buyers, they tend to be younger. They tend not to have large superannuation balances. The data I've seen, which is admittedly a few years old, suggests 25 to 34-year-olds have something like $25,000 at median, which is not huge in the context of a deposit for a house. So I don't know that it's going to have a big effect on first home buyers' ability to purchase a house. What I would say is it's at least trying to tackle the right problem, which is saving the deposit.
There you go.
That's the real constraint.
Tell you what, Angus, good to have in the program from REA Group there.